Hello everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 6th of March and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 11, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big stories across the franchised and independent sectors for you to enjoy all in one place.
So, I mean, again, I'm not going to say it. I'm going to refrain from saying it, Curtis, how busy the week has been. But, I think we've not even managed to get an interview in this week, have we?
We've been too busy, and it hasn't been helped by the budget, which already seems dim and distant. But of course, that dominated the week, and we will return to the budget. We'll give a quick roundup of the industry reaction on that. But yeah, it's been a busy old week.
Yeah, there's a lot of other conversations taking place in a lot of the national media at the minute, isn't there, away from the budget. The budget, like you say, it seems a long and distant memory now. There's things with what's happening up in Scotland and things like that. So there's a lot of other things taking place. But we'll stick to the automotive industry this week, Curtis?
Yeah, and it's worth just adding a couple of shout outs. So last week we interviewed Darren Martin, head of valuations at CAP HPI, and it's worth heading back to that interview because he is talking about used car trends over the course of February and going into March, and his views on the sort of short to medium term.
And we've got an exclusive again, haven't we? We've got the early sight of the eBay Motors Group February used car data trends, which we'll share as well this morning.
We have indeed. So this week's headlines, we've got the February new car and van registration figures. As you say, exclusive data from eBay Motors Group on used trends for February. We will have a quick look at the budget just to gauge industry reaction to the budget. We've got a rebrand for Auto Service Finance and an acquisition from Cox Automotive. And we'll close with, it's actually a roundup and hopefully a final resolution on the FCA's investigation of Lookers, which is a story we've tracked for, probably best part of the year now.
Yeah, it will be. Yeah, it's been going on a while, that one, hasn't it? Since they suspended their financial announcements initially, but before that it was the investigation. So, as you say, headline of the week is the SMMT downgrades the 2021 car forecasts again ahead of the dismal new plate. They described it as in February. Now, that's February falling by 35.5%. Now, to put that in context, that's a drop from 79,594 registrations in February of last year compared to 51,312 of February of this year. So again, significant percentage drop, but in terms of volume, it's not huge in terms of lost volumes this time.
No, and February, as we know, it is traditionally a weak month, but nevertheless, the SMMT did point out that this is the weakest February since 1959. So year to date is down 38.1%, so that follows a 39.5% fall in January. And this is bad news because we have got the third COVID impact plate change coming up next month. So we'll have those figures next month, and we'll see how those pan out. So it is disappointing, but it is kind of expected because, as I say, February is traditionally a weak month, and the results actually prompted the SMMT to revise its new car market forecast to 1.83 million registrations for the year. So that's down on 1.89 million that it was predicting only last month.
Yeah, and again, mainly driven by the retail in terms of the private registrations there at 36% down in terms of that. But I think 38% down for retail. But I think what we need to put in context here again is the loss in daily rental. I mean, daily rental is down 83% year on year. So, and you can expect that, can't you? I mean, in terms of
Yeah.
what's happening in that sector at the minute, there isn't the volume going through. There were some winners and losers in the daily rental market, so there was some activity, but not to the level that we saw in February of last year. And again, demonstrators down, and the fleet sector actually wasn't as bad as you may expect for True Fleet. It was only down 22% compared to last year. So actually, the fleet sector performed better than the private sector in February.
And it was a strong month for both BEVs and FEVs. So BEVs were up 40% and FEVs were up as well. And together they took a 13% market share, and that compares with 13.2% for diesel. So in the year to date, if you look at BEVs and FEVs combined, that's tracking at 13.4%, and compared with 12.6% for diesel. So overtaken diesel.
Yeah, and in terms of Europe, I like to throw a few European comparisons in here. France was down 20.9%. Italy was only down 12.3%. So Italy, again, they were down 14% last month in terms of January, and 12.3% in February. Spain still having a tough time, 51.5% down in January, and again 38.4% down in February. Germany wasn't too bad. They were 31.1% down in January and only 19% down in February. So again, some green shoots there, should we say, in some of the European markets as we start to pull out of this. But I think the big thing is with what you were saying before with the reforecast. We've got to know that March we're now in March, and the showrooms don't open until the 12th of April, do they? So we know that there is going to be a potential downturn in March, and that's probably what's driven the reforecast from the SMMT.
Yeah, definitely. And final word on the figures. So for the month of March, every single car brand registered a loss. Most of them were double digit. And looking at year to date, the only two brands that have seen any increase in January and February are Porsche, who are up 21.2%, and Smart, who are up 36%. But otherwise, everyone else is down.
And heading over to motortrader.com is the vans, and again they're talking about the boom in online deliveries fuels sales of vans in February. So again, a strong performance for the LCV sector in February.
Yeah, having said the car market was at its weakest point in February since 1959, the LCV market up 22%, and it's actually the strongest February since 1998. So 17,205 new vans were registered, and that was on the back of demand from online deliveries and the construction sector. So that's really what's driving this uptake. The significant growth there for vans weighing 2.5 to 3.5 tons, so larger vans, they were actually up 30% on last year. And the February figures follow a 2% rise in January, when we also reported on the eBay Motor Group figures showing heightened interest in used LCVs. So there's a lot of activity out there at the moment, a lot of interest in vans, new and used.
Exactly. So talking about Motors market view, so eBay Motors Group market view there, we've got some figures there, early sight of the figures that haven't been released yet.
We have. These are exclusive. Now, by the time we go out Saturday morning, these should be on the ebaymotorsgroup.co.uk website. So head over there to the news section if you want to drill a bit deeper. But for February, February was pretty much on a par with January across much of the criteria that eBay Motors Group look at. So stock volumes per dealership were at 50.6 units, so that was the average, and that compares with 51.5 in January, so only really 1 unit difference there. And in terms of average days to sell, even they stood at 49.5 days, which was exactly the same as the position in January. Now, interestingly, list prices, advertised list prices for the month were actually up 1.5% from £12,370 to £12,558. So, an encouraging trend there.
Yeah, and just you talking about the sales volumes there, and in terms of the stock volumes, sorry, in terms of compared to February of last year at 55.1, so a drop there, but obviously, again, slight increase in the days to sell. So sort of supporting the challenges that the lockdown and the click and collect position that the retailers are in is having a slight effect in terms of the average KPIs that the business would operate. So again, an interesting glance there into what eBay Motors are seeing.
Yeah, and worth pointing out that inquiries, so inbound inquiries, were actually up 27% year on year. And I guess what's particularly significant, if we do look year on year, is that February last year was actually the last. Well, can we call it a normal month? I think we probably can. So it was the last normal month. So February this year, those leads were up 27%. So it is showing that buyers are out there. They are active online. They can't visit showrooms, but they are generating leads online.
And we have got a top 10 fastest selling makes and models, which Ford Puma is in a number one position there, followed by the Citroen C3 Aircross, and then the Hyundai Kona in third position there. So an interesting mix of vehicles there in the top three positions.
Yeah, so let's move over to the budget. We won't go into the fine detail of the budget because I think we're all probably budgeted out. But if you head over to AM Online, that they've actually got a really good roundup of the main points of the budget and how it impacts the sector. So the headline there is Budget 2021, business support continues, but corporation tax rises incoming. So good roundup there. And if within the story they talk to Sue Robinson at the NFDA, and she welcomes the extension of the furlough period, which is now due to end in September, and the business rates holiday, which she described as one of the most welcome forms of financial support offered during the pandemic.
Yeah, but I mean, there is a little bit of negativity coming from Steve Nash there, from the IMI. We've had on the podcast, haven't we? We had Steve on as a fantastic interview there. He was the chief exec of the IMI, and he feels that it was disappointing that the lack of any real tangible support to improve apprenticeship take up from the budget, and felt that with the government still refusing to waive the apprenticeship levy clawback, that if funds are not used within 2 years, the picture for apprenticeship route is in the automotive sector looks fairly bleak. And he was talking about that on the interview, wasn't he, around the government clawback and the support for the apprenticeship schemes within the automotive sector, because we still haven't really seen the true impact of the EU exit on apprenticeships within the sector. So again, he didn't see that as a welcome news, did he?
He didn't know. James Chew from iVendi, a bit more positive, saying what dealers fundamentally wanted from this budget was a stable economic background that allowed them to plan for the rest of the year with a high degree of certainty. And he believes that the budget has delivered that.
Yeah, no, I think I'd echo that. I think there is some lines in the sand. We've got the opening of the showroom, we've got a strategic recovery out restriction lift from the government, plus he's laid out the extensions to the furlough and things like that. So I think there is a degree of, like you say, the sector being able to plan, which has been the key issue, hasn't it, with all of this, the inability to be able to plan because of so many variables. So at least then the sector can now put some planning in place.
Yeah, for good or bad, some of the uncertainty has been removed or certainly clarified. So it is a line in the sand. So you're listening to All the Chatter That Matters on the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, Amazon Music, or wherever you find your favourite podcasts.
So heading over to AM Online now, and this is probably for me, isn't it, in terms of the Cox Automotive continues growth strategy with the acquisition of Code Weavers, and I know the guys at Code Weavers with Sean Harris and Roland and a few of the others there, but fantastic business and a great acquisition for Cox Automotive.
Yes. And it actually follows an acquisition you guys made in March last year when you bought C. Walton at Bruntingthorpe, which I think at the time was your biggest ever acquisition. So this, from an outsider looking in, this looks as though there's a bit of strategic momentum here in terms of acquisitions. And Code Weavers, what a great business to have.
Can you believe it was a year ago that the CW Walton was the acquisition took place just ahead of lockdown? Funnily enough, it was weeks before we went into a national lockdown. So that was. Hats off to all the guys down at CW Walton there. The work that they did. We sort of took the acquisition, tried integrating them into the business, and went straight into a national lockdown. It's just actually a year on. I think they've just been celebrating a year under the ownership. But like you say, they're with the acquisition of Code Weavers is an integral part of our strategy, and that's about helping our customers build a stronger retail presence. And this is a really strong business, particularly within that new and used e-commerce platform. They do offer extensive digital capabilities built within. So a great team, and to be fair, the benefits of Code Weavers, they bring in a great deal of expertise and knowledge into what we do, and the solutions that will align with our Modix proposition as well in the UK and Europe.
Yep, and heading over to Car Dealer, the headline there is Auto Service Finance rebrands as Bumper, as it's named one of the fastest growing companies in Europe. So this is one for me, because I've been working with the guys at Bumper on the rebrand and circulating press releases. So this is, brilliant timing for them, because the rebrand happened at the beginning of the week, and it was actually on the same day that the FT published its FT 1000, which is the annual look at the fastest growing companies across Europe. And Bumper were actually rated number 89, and that was based on growth of, wait for this, 1,385.7% increase in turnover. So that's over 3 financial years, which is the criteria that the FT uses. And that propelled them up to number 89 across Europe. So great showing there. But the real story here is the rebrand. So listeners will be aware of Auto Service Finance, who launched back in 2014 as a fintech by James Jackson and Jack Allman, and it was really to provide an interest-free buy now pay later platform for servicing and repair work. So it takes that pain out of the point of sale, where you're given your bill for the servicing or repair work, and rather than find the money there and then, Auto Service Finance provide a platform for interest-free payments to ease that pain, and it's a win-win for the customer and indeed the dealer and workshop. So they've rebranded as Bumper with some bright and distinctive branding.
Yeah, like you say, fantastic timing, isn't it? Just for the rebranding to fall in time with that same sort of FT 1000 announcement as well. Great position there, particularly you're in some stiff competition. They've got in that marketplace as well with what's been going on. So, and I know we've spoken about these guys a few times, and hopefully we'll get these guys on the podcast at some point and talk about it, because we've kind of had them in the background a little bit over over the years and what they do. And I know that they are used a lot across the dealer market with both large and small retailers. And it's it's a great benefit to that retail sector around that servicing and after sales costs. And I suspect throughout the pandemic and post pandemic it'll be ever more required in that sector.
Yeah, and finally, so we've got hopefully a conclusion to the Lookers story. So we're heading over to Auto Retail Network, and the headline there is FCA closes Lookers investigation. So this is some welcome news for Lookers, who, the story reports will not be fined by the Financial Conduct Authority following the investigation by the regulator into the retailer for possible finance mis-selling. And, Lookers has reported that the FCA has closed the investigation relating to sales processes used between the periods of January 2016 and June 2019.
Yeah, no, I mean it must be a great relief that now that has finished, and like you say, the case has been closed by the FCA. So Lookers trying to do what they're doing throughout this pandemic and recovery from the pandemic and come under these pressures, and obviously with the delays of their shares off the market and the financial statements. I mean, they've been through some interesting times, should we say, throughout this, whilst the FCA has been there in the background with the investigation. So again, it's probably welcome news to these guys, and I know that Mark Rebrands, who we have had on the podcast previously, talks around obviously that it is they fully accept the FCA's comments and is committed to continuing the progress they made to date in terms of transforming both the culture and the customer experience. So they have taken it on board, and there's learnings, but I think it'd be definitely welcome news for these guys.
Yeah, definitely. And that's basically all we've got this week, isn't it? A fair few headlines there to rattle through. And, as we said at the top of the show, it's a busy time for dealers because, of course, we have got the introduction of the new plate. I still haven't seen a 21 plate on the road, but probably like you, Phil, haven't really been out much.
No, I've not been out much. But there's been a lot of activity in the social media. I think there's one thing that has been clear this week is some of the social activity that's taken place with handovers and new plates within the dealer market. They've really embraced that digital presence this year, which has been great to see. And hopefully, we'll get some. We'll get through the end of this, get through March, have a reasonable March, get some cars handed over and some part exchanges, some welcomed part exchanges coming in, and get ready for that 12th of April opening, and get back to some kind of normality, or is it new normality? I'm not quite sure what it'll be, Curtis.
I think it's redefined normality.
That's about it.
Whatever that is.
But again, I suspect next week there'll be plenty of headlines again. So head over to the websites we've mentioned there. Plenty of activity taking place this week. Lots going on with the impact of the budget that's still being talked about, what it means for the sector. The new play, etc. So again, lots taking place. So we'll try and keep you up to date as it occurs.
That's all for this week. Thanks for joining us. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Stay safe and stay well, and join Philip and I again next weekend for all the chatter that matters. Until then, it's goodbye from me.
And it's goodbye from him.